In exemption on residential house under Section 54 of Income Tax Act. Hello everyone, in this video, we will dwell into the capital gain exemption on residential house under Section 54 of Income Tax Act 1961. We'll also discuss the recent amendments introduced by Finance Act 2023 effective from 1st April 2024. So what is Section 54? Section 54 provides relief from long-term capital gains (LTCG) tax when an individual or Hindu undivided family (HUF) sells a residential property and reinvest in gains into another residential property in India. So the eligibility criteria, the assessee, either individual or HUF, asset sold, long-term capital asset, that is a residential house held for more than 24 months. Reinvestment, purchase or construction of new residential house in India. Time frame for reinvestment, suppose if it is a purchase within 1 year before or 2 years after the transfer. If it is a construction, within 3 years from the date of transfer. Quantum of exemption, if the capital gain is less than or equal to the cost of the new house, then entire capital gain is exempt. If the capital gain is less than or equal to the cost of the new house, then entire capital gain is exempt. Suppose if the capital gain is more than the cost of new house, excess amount is taxable as LTCG. Suppose if the capital gain is more than the cost of the new house, then the excess amount is taxable as LTCG. Capital gains account scheme CGAS. What is this scheme? If the capital gains are not utilized for the purchase or construction before the due date of filing income tax return, then the unutilized amount should be deposited in a CGAS account, capital gain account scheme, to avail the exemption. This is the facilities, So the conditions for retaining exemption. The new residential property should not be sold within 3 years of its purchase or construction. So the new residential property should not be sold within 3 years of its purchase or construction. If sold within 3 years, then the exemption claimed earlier will be revoked and the capital gain will become taxable in the year of the sale. So the amendments by the Finance Act effective from 1st April 2024, cap on exemption amount. The maximum exemption under Section 54 is capped at 10 crore. So the cost of new asset exceeds 10 crore. It should be deemed to be 10 crore for the purpose of exemption. Even if it is more than 10 crores, so for the purpose of, is deemed to be 10 crore for the purpose of exemption. Example, if capital gains are 15 crore and the new house cost is 12 crore, then the exemption is limited to 10 crore and 5 crore becomes taxable. Amendment in CGAS provision, the amount deposited in CGAS for claiming exemption under Section 54 shall not exceed 10 crore. So any amount exceeding 10 crore will not be considered for exemption purpose. So the options to invest in two houses. Taxpayers can claim exemption for investment in 2 residential houses in India, provided the capital gain do not exceed 2 crore. The option is available once in a lifetime. Judicial interpretations, we see the purchase in spouse name. Courts have held that the exemption under Section 54 is available even if the new property is purchased in the name of the spouse, provided the consideration is paid by the assessee. So multiple units, suppose if multiple units are purchased and used as a single residential house, then the exemption under Section 54 can be claimed. So the key takeaways, Section 54 provides significant tax saving opportunities and long-term capital gain from sale of residential property. So strict adherence to timelines and conditions is crucial to retain exemption. Recent amendments have introduced caps and additional options, enhancing flexibility for taxpayers. Please subscribe to RR Corporates and RR Legal Talks. We have 2 channels. Thank you.